What is the significance of Bitcoin ETFs, and what impact could they have on the cryptocurrency industry? It's a question that has been circulating in financial circles for quite some time. In the early days of Bitcoin, the idea of a Bitcoin ETF was nothing more than a pipe dream. But as cryptocurrency has gained traction, so too has the push for a Bitcoin ETF. The journey towards approval has been a long one, marked by numerous roadblocks and regulatory hurdles. In the beginning, the concept of a Bitcoin ETF was met with skepticism. Critics argued that the volatile nature of cryptocurrency made it an unsuitable candidate for such a traditional investment vehicle. However, as Bitcoin started to gain acceptance, the tide began to turn. In the mid-20s, the financial world witnessed significant steps towards the approval of Bitcoin ETFs. Companies like Invesco and Galaxy Digital Holdings began partnering to launch cryptocurrency ETFs, ready to launch as soon as the regulatory green light was given. Despite these preparations, the US Securities and Exchange Commission, SEC, remained cautious yet to approve any cryptocurrency ETFs. The hope for a Bitcoin ETF was further fueled by the involvement of major asset management firms like BlackRock and Fidelity. Additionally, a court appeal won by Grayscale Investments gave investors further hope. With over 10 spot Bitcoin ETF applications being reviewed by the SEC, the anticipation was palpable. And then the breakthrough moment arrived. The SEC approved 11 spot Bitcoin exchange-traded funds from various issuers. This marked a significant milestone in the cryptocurrency industry and is expected to make investing in Bitcoin more accessible to a broader range of investors. So what does this mean for the future of cryptocurrency? The introduction of Bitcoin ETFs is anticipated to bring more investors and assets into the crypto space. The regulated nature of Bitcoin ETFs adds an extra layer of assurance for investors, mitigating concerns related to security, custody, and compliance. Furthermore, the introduction of Bitcoin ETFs is anticipated to have a profound impact on the liquidity and overall market dynamics of Bitcoin. As these ETFs become more prevalent, they are likely to attract a broader investor base, contributing to increased demand and trading volumes for the underlying cryptocurrency. To summarize, Bitcoin ETFs represent a significant shift in the dynamics of investor engagement with the leading cryptocurrency. They offer a regulated gateway for investors to access and trade Bitcoin seamlessly, eliminating the intricate complexities associated with managing individual cryptocurrencies. They also provide a structured and regulated avenue for investors to gain exposure to Bitcoin's price movements without the need for direct ownership and custody of the digital currency. The journey towards Bitcoin ETF approval has not been without its challenges, but the recent approval of 11 Bitcoin ETFs suggests a brighter future for the integration of cryptocurrency into traditional financial markets. And as these Bitcoin ETFs become more prevalent, they are likely to contribute to increased liquidity, demand, and trading volumes for Bitcoin.